Hi, in this video I'll be sharing with you the Bollinger Band trading strategy for trading gold. If you have been struggling with how to make exact entry analysis when it comes to gold trading, search no more, because in this video I'll be handling all it takes for you to be successful and profitable as far as gold trading is concerned. So the Bollinger Band we are using is the Bollinger Band period 20, the version is 2.0, the shift is 0, you apply to close, and of course we have our indicator windows, the period of the RSI is D. Then change this color to your background color. If your background is black, change that color to black. Then you have our commodity channel index and the period is 14, typical high price, high low close 3, and this, if you do that correctly, your chart will be looking exactly like mine. Now, what is the function of this Bollinger Band? This Bollinger Band serves basically three functions. Number one is that the Bollinger Band helps us to buy high, help us to sell high from the upper Bollinger Band, and then help us to buy low from the lower Bollinger Band in confirmation with our indicator window, which means that if we want to sell high from this upper Bollinger Band, we want to see our CCI to be at the level of 80 and 90. And if we want to buy low, just like in this scenario, price should be around the lower Bollinger Band and our CCI should be coming from the level of 20 and 10. However, this is not traded in isolation. What do I mean? Because you just saw price around the lower Bollinger Band and CCI around the level of 20 is not enough for you to just jump in and buy. That's the first thing I want you to understand. Because if you look at this case, here price is at the upper Bollinger Band, but you realize that price is already here at the level of 80 and 90, but you see price push all the way to the upside. That is to let you know that this system is not based or driven in isolation. There are other confluences, such as you must first of all determine the trend of the market. And after determining the trend of the market, you need to identify your point of interest. Your point of interest can be your area of support and resistance, it can be your order block. Like in this scenario, look at what happened. Price left here, price touched here before. So obviously, this is a resistant zone. So we can mark this zone as our zone of resistance, and we are waiting for price to come into it. So look at what happened. First touch, second touch. Now when price came into it the third time, and then our CCI is at the level of 80 and 90, and these zones is at the upper Bollinger Band, because the upper Bollinger Band and the lower Bollinger Band serve as dynamic support and resistance. So price got rejected from there because it's a resistant zone and it sold to the downside. Do you see that? So that's the reason you had that particular price behavior. So another one is you need to determine the trend of the market. You need to determine what? The trend of the market. Now, gold move in a very strong momentum. The speed and the strength of gold is always high. What that implies is that we can use the middle Bollinger Band to determine the bias of the trend of gold, because this moving Bollinger Band serves as period 20, same as the moving average. So what it connotes is that when price is consistent above the middle Bollinger Band, is an uptrend, and when price is below it, it's a downtrend. But there's an exception to this rule. Like in this scenario, price return from this zone, price came all the way from here to the downside, and immediately it went back to the upside. So this is not enough to define the trend, and that is why we say price must be consistent. So in this case, price went up, price came down and continued to the upside. If this must be a downtrend, price must come down, go back, retest the middle Bollinger band and continue to the downside. So that is the validity, that is the confirmation that we are in a downtrend. So as you can see, price is in an uptrend. So how do we take this trade? We have determined that price is in an uptrend, but look at what happened. That price had been here before, so we can mark here to as additional confluence. See that? That is our support zone. So this is our support zone, our first touch. So when price came in the second time, it's around the zone of the lower Bollinger band. CCI is at this zone. We have bullish candle confirmation, or you can even be patient to wait for price to close above the middle Bollinger band. So you see price close above the middle Bollinger band, then you buy from here now. That is your entry, right? Your stop loss is at this low. You have your stop loss, and then you can see how price bought all the way to the upside. Okay, you can as well use your trend line as a confirmation tool. Connect your trend line this way, you wait for price to break out of it. So here price break out of your trend line, and then you are good to go. So this is how you can use the Bollinger band as your entry confirmation. First, you determine the trend. Then number two, the Bollinger band helps us to identify volume, volatility. It helps you to stay away from a ranging market. Now look at this scenario. If you look at the price behavior in this zone, you can see that there is no stability of price. What do you observe? You realize that price is moving in a choppy way. Price come from the lower Bollinger band, it went to the upper Bollinger band, came back to the lower Bollinger band, went to the upper Bollinger band, came back to the lower Bollinger band, and then went up finally. So this is a typical example of a ranging market. And when you observe how the Bollinger band behave, you realize that the Bollinger band has shrink together. There is no impulsive movement. You can see that how the Bollinger band was behaving in this scenario. So anytime the Bollinger band begin to shrink, it shows that there is no volume. That is a consolidation of the market, and price can be easily manipulated. But in this scenario, look at what happened. Price eventually break out, and then you see that move. So anytime you see expansion of the Bollinger band, it shows that there are high volume orders in the market. You can see it here as well. That's how it shrink for some time before it now proceed. So for instance, if you are in an uptrend, look at what happened. Here now price left here, price pushed to the upside, right? Then after that push of price, after the push of price from here, after we had this massive push of price to this particular point, look at what happened. Price begin to range. Now what this connotes is very simple. Price has been trending up, and then suddenly price begins to range. It simply means that you already know that this is an uptrend. This is a pullback. Price is trying to breathe before it will continue in its original movement. So all you need to do is for you to wait for this consolidation to break out. So the Bollinger band make it easier for you to identify what is happening. So this is a pattern formation, and then you see price breakout. So here becomes your entry, see your stop loss here. And then you see how price, so it will break out, you will find your entry in the direction of the trend. That's just how simple you can go about it. So you would have been in this trade all the way to this point, and you can see how that works perfectly. So if you understand other trading patterns, you can incorporate it into your trading, and it will be very, very much effective for you as a trader. And this is exactly how you can take advantage of this particular strategy by using the Bollinger Band indicator. In trading gold, you can see that price is consistent either below. Consider here price went back, retest it and continue. As far as price remain below the middle Bollinger Band, you focus on selling, and when price is above, you focus on buying. But however, you have to determine your trend so that you don't get to make mistake. And I believe that you have learned something new. If you are here to subscribe to this channel, please do so, and do not forget to like and share. Above all, in the subsequent video, I'll be sharing with you exactly how you can buy from a discount zone, you buy low, and now you can sell high from a premium zone using the Bollinger Band. Thank you and see you in the subsequent video.